So because of the situation, many economists are expecting an increase of 50 basis points tomorrow in interest rates. That'll take the prime interest rate to 8.75%. Extremely high if you're in debt. That'll put more consumers under even more pressure. The Reserve Bank, of course, uses higher rates to curb inflation. Higher rates means that consumers have to pay more for credit and they have less money to spend on goods and services. That should have the effect of dampening demand for goods and dampening spending to control price increases. To discuss, we're joined by economic analyst, Professor Bonke Dumisa. Prof, thank you for being with us. Is inflation running away with us?
Unfortunately, yes, the inflation is running away with us here in South Africa, but we must not really be too scared because this is happening all over the world. The inflation rate in the US as it is now is over 9%, which is unknown of there.
Yeah.
And in the UK is very high. So it is very high. And what worries me is that tomorrow I heard you talking about the repo rate going up by 50 basis points tomorrow. But there is even a likelihood that the South African Reserve Bank may follow what happened in America and simply lift it by 75 basis points to 5.5%. But let's hope that the majority of people who say it will be just 50 basis points are correct.
So the prime lending rate is at 8.25%. So that'll mean the prime lending rate goes up to 9% if that happens. And what does that mean for consumers, for the economy, for people who are already strained and already facing a lot of price increases across everything they're buying?
It is really bad for almost everyone because the consumers are already complaining about the high rising cost of living. And you must remember that the CPI affects mostly the people who are poor because the average basket of goods that we are using has more of the things which are bought by everyone, including those which are bought by the poor. And the businesses as well, the cost of doing business is going to go up, as you've really already alluded to the prime overdraft rate. So everyone is really going to struggle, and we must bear in mind that this is not a South African thing only. It is happening all over the world as it is now. We must just tighten our belts more. And what is worrying is that these repo rate hikes in South Africa are actually being triggered by the external factors, imported inflation, as you've said, that it is because of what happens between Russia and Ukraine. So as long as the Russian-Ukrainian thing keeps on going on, it means we'll keep on seeing the fuel prices going up, and the fuel prices are the major trigger for this inflation.
So we have no idea, because of the Ukrainian situation, when this inflation train will stop. Professor, interest rates are a blunt tool because it stops spending, but the problem is people aren't spending too much. Like you said, fuel prices, that's external to us. That's a global phenomenon that our Reserve Bank can do very little about. We have to travel. So interest rates are a blunt tool, but I guess it's all we've got.
Unfortunately, the South African Reserve Bank has got only one mandate, and that is monetary policy, how they manage the inflation. And they are using the tried and tested tool of raising the interest rates. The problem about that, as you say, it's a blunt instrument, is that instrument used to work well in the past when the inflation was caused by people taking too much debt. But as I've said already, these inflation rate hikes are not influenced by people taking too much debt, but it is because of imported inflation from what is happening globally. And that's why it's affecting even countries like the US, the UK, etc. In Turkey, they had their repo rate at over 70%. So sure. It is bad for the whole world. And let us just hope that this whole Russian Ukrainian thing can end soon.
Is there any advice for people who are in debt, anything that they can do?
Those who are in serious debt have the opportunity to approach the debt counselors for their debts to be rearranged. But as I say, the problem is not mostly with people who are in serious debt. It is affecting everyone.
And let's look at this. I mean, food prices already up nearly 9%. That's bread, cereals, oils and fats. And we know that the poor spend a large portion of their income on food. So they're feeling it. And then fuel. And now if you are in debt, it's going to be tougher. Thank you for that.